Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 31st of March, 2020. This is the last day of the month and it's the last day of the quarter. Keep that in mind today. Q1 is over, and what a quarter it has been. So later in this session, do expect that there will likely be, as one of our head traders said in the Convergent channel, head trader channel, they're likely to be window dressing towards the end of the day. He's just not sure if there are any windows left to dress, but it is the end of Q1, an important day. So look for some maneuvering on the close. I would definitely. This is one of those days you wouldn't want to fade or go contrarian on a closing move. I want to remind everyone that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is brought to you by EdgeClear. Um, the overall, and of course, this is episode number 1,700 and what is it, 24? Wow. This morning, we yesterday was a kind of an interesting day. The way we had set up in the overnight session was providing for the strong potential of a continuation from Friday in the U.S. indices for a drop, and it ended up testing lower, a very solid test, and then continuing higher to put in a higher low, higher high, pretty much across the board. This morning, however, the sentiment is yet again off of where we closed. We have crude oil taking a small pop, up 98 cents, up 98 cents, 99 cents, trading at 21.08 on the May contract. Volume is quite decent in crude, 248,000. The DAX is up, the Euro stocks are up, but the U.S. indices are down. The S&P is down 17, 18 points, are 0.68%. The Russell's down 6.4 points. The Dow's down 114, and the Nasdaq's down 40 and a quarter. Gold is off again, down $22.80 at 16.20 on the June futures contract. And so this is where we stand today. It's the overnight session or the extended trading hours. European hours had a lot of numbers out of Europe, just a ton of them. The key of which are GDP growth rate in Great Britain. Q on Q came in at 0% in line. Year on year also came in at 1.1% in line. Those numbers are likely to take a pretty good hit when reported next month. Core inflation came out of the EU, and Case-Shiller home came in slightly softer, slightly lower. This morning we do get Chicago PMI, which comes out early for subscribers, comes out at 9:42 Eastern or so, and is released to the public at 9:45, expecting 40.5. The price is 49. So definitely going to take a hit there. And then we have crude oil stocks, API stocks after the close. And this evening, Japan releases its Tenkan Large Manufacturer Index at 7:50 p.m. And then I always get this wrong, the Kaijin something manufacturing PMI. Sorry if I butchered it. Expected to come in at 45.7. That comes out at 9:45. That is a major release. So that's where it stands currently. In terms of the overall driver today, there's still a lot of talk. I believe regulators or legislators are across the globe are looking at stimulus, further stimulus. The House of Representatives in the U.S. is working on a fourth stimulus package. There is some pressure for Saudi to do something about oil prices. It is definitely putting putting a lid on the U.S. Markets, and so there's a conversation going on there. But there, there's a lot of news flow. The U.S. continues to get a lot of coronavirus cases, as is Spain. Spain is absolutely getting pummeled right now. They increased the number of infections that they found by about 10 or 11% yesterday. So that their graph or their line does not seem to be flattening at all. It just looks really, really bad over there. In any case, that's what we've got in terms of what was expected yesterday. Here's our review segment. Yesterday was looking for a pop higher, really a test of the overnight high, and I was expecting the market to actually continue this downtrend, which was incorrect. It did not want to do that. Instead, we played out scenario two, but we played it out in a way that where it did not go as deep as expected. Scenario two was expected to drop into the point of control and a value low, and then turn up and push towards the 2587 area and so on. Here's what actually happened. We ended up pushing down almost to the tick on the point of control. You can see it right there. Let me turn off the stock zone areas here. Point of control is this maroon line right here. It is the most traded price from the prior session. It pushed right to it, right there, missed it by I think 5 ticks or so on a drop. And then it turned around, and once it took out the high from the opening swing high, it was no more selling at that point, just looking for long side trades only, with a target of 2600 at that point, the century figure. And then once that's achieved, we're looking for 2605. And then for the naked close from Thursday to be tested as well. And it did a good job of taking that out. We have a P-shaped profile yesterday, a P-shaped profile that is short covering. It pushed quickly out of the bottom and consolidated at the top. A pretty clear short squeeze. Now the overnight session held promise for the longs. Let me expand this out a little bit. Held promise for the longs here as it held the closing area, and it continued to consolidate until about 7 o'clock, where it just dropped off. I'll show you that here in a minute on my bookmap screen. But the market has definitely tested down to yesterday's IB high here at 72. The overnight low at 72, came in at 72.50, and missed yesterday's IB high by a couple ticks. Nothing significant at the IB high, except that there was a fair amount of liquidity down there between 73 and 74 that it pushed into and bounced from. Here's what Bookmap shows. We reopen right here at 5 p.m. my time here in Chicago, and it pushes around. We have a nice two-way auction, as we often do in the Asian session. Tests the first liquidity level, pulls back, pushes into the second and third liquidity levels, and fails. Attempts lower. So now we found our sellers up here. We see there's some firm liquidity up top in the 2635 area. And then so now it starts to discover prices on the low side, looking for buyers, and it did find them down here early on at 25.95 below the century figure. And then we resume this push up into 35. The overnight high is at 35.75. Liquidity there stable and stops the market from moving further. And then from that point on, it just rolls right over and drops from 26.35 to 25.72. A fair amount of dropping there, 73 points or 63 points or something like that. And now we're in the recovery phase. We've made a pullback, higher low, and we're pushing back up. The liquidity here is not likely to stick. The liquidity on the hard right edge is just popping in and out. But currently the market is just recovering, and sellers are likely to give up above 26.15 on this, in my opinion, if it starts to push higher. We see liquidity starting to pop in here and here, but this doesn't mean anything until we arrive there. If the liquidity sticks or gets deeper, in other words, the color gets darker as we push higher, darker meaning more and more, deeper red. As we push higher, then it's meaningful. Otherwise, this is just posturing. All this liquidity that we see here is just basically posturing as the market moves around and as people position themselves back and forth and flip and so on. But this is what's happened. Selling from 4 o'clock Central onwards, a lot of the numbers that came out from the Eurozone were at 4 o'clock. What I've seen is that the numbers out of Italy were pretty decent, were higher than expected. Pretty decent numbers, but the market still sold off, but the delta still remains strong, still remains strong for the session despite the sell-off. So I find it odd. I find the behavior here pretty odd, so it's interesting to look at. Let's take a look at the overnight session for a minute as we work through our process. Here's what's happened overnight. Again, pushes a little bit higher, pulls back, and then pushes to the high of the day of the session, and then it pokes down in towards the 72, puts in a low at 72.5, and it's pulling back. We're below mid VWAP and the point of control. We have a weakish high in what is a profile that is skewed to the top side. Under normal circumstances, I would expect this to extend up, and not remain this blunt. But given the fact that it really had a pretty decent drop from the high to where we are now, it kind of changes things. And the expectation is it's likely to have a hard time pushing through this all the way up to 26.15. Once it gets above 26.15, then we have a pretty good shot at the 26.35 in a day session. That's just my opinion. But that's what the night session is saying. Notice the volume. Volume 389,000. That is the lowest volume in the overnight session in weeks. The market is starting to stabilize and rest a little bit. And that's what we're learning from that. There isn't this frantic price discovery overnight, and it seems fairly stable in terms of what the auction is doing. In terms of what's expected here for the session, let's set that screen up. Here we go. In terms of what's expected this morning, it's a tough call. We're opening right in value, and that value is valid from yesterday. We had a very orderly auction, really, in and through the 2600. We have a very clear value area from the 2579 area up to 2615. And we're holding steady in here, and we're opening in value and range. And so here's the open auction. I'm looking for it to respond back. Much of the volume overnight is actually above the close, giving us an overnight inventory that is slightly positive. It's really flat, but I'm looking for it to respond back to the point of control and then come back to the open and explore lower initially before it starts to stabilize. I'm looking for a fairly muted day, a digestion day, not really looking for anything outstanding. And I hope I'm wrong because I'd like the bigger rotations to return. The secondary scenario is we open, we test the overnight low, that 25.72 area. We test that area and then we impulse up, consolidate, push into the point of control, and squeeze above yesterday's high of 21.75 and make our way back to new highs again for the week. So that's the secondary scenario. We're opening in range in value, so expect some chop on the open. There's a good incentive for both sides to play here. I want to show you actually, let me clear that and show you where we are in the big picture. Here's 26.39 to 38%. I know there are a lot of fib traders out there, but the swing from the high to the low, from the high right there in the June contract is 33.8250 to the low of 21.7950. The 38% pullback, the first pullback is at 39, and we pushed into 35.75 this evening. So we may have my point here being there's an incentive for both sides to act today on a higher time frame. Today, my trading is likely, my view on the market is likely to be just to wait for the first 15 minutes, be tentative, wait for the Chicago PMI to get released, and then look at which side is getting the better rotations. And the way I track that, I'll show you that here real quick. The way I track these rotations is down here with this with the zigzag. Okay, my zigzag's currently set to 19. The pullbacks are set to 19. To 19 ticks. And what I want to see is which side is getting better rotations. And all I'm doing with the zigzag really is measuring how these rotations are going up and down. You know, are we rotating up more easily or down more easily, and then trade from that side? It's a combination of price action trading plus order flow with a foundation of where we are in the auction, and where we are in the auction is in yesterday's value and in range. And so I need to be aware that this could be a pretty decent chop zone from the 25.80 all the way to 26.15. So just be aware, just coming in, being fully aware, you know, eyes wide open, that's where we are. And then from there, look for which side gets the better rotations, these zigzags, which side is actually facilitating trades better. That's the side I want to trade from. Being as we are in value, I'm going to give them the longs and the shorts equal weight. But at some point, somebody's going to step in and push directionally, and I'll start to look from that direction. That's basically, in a nutshell, how I look at this market. Okay. That's all I have for you for today. As I announced yesterday, EdgeClear is going through a soft launch this week. Please visit edgeclear.com and punch in your information. We'll send you an email, no spam. We'll send you an email letting you know we're launching. It's a brand new brokerage, and the team is very excited to get this going. It's designed for the independent online trader. And our goal is to make the process of help you focus on the markets rather than on platforms and data feeds and all these other issues. And then there's a strategy for further development, technology development later on, where we'll help you with your performance as well, hopefully. Good luck, everyone, and I'll catch you soon. Take care.